All right, let's talk about something huge. Today, we're going to pull back the curtain on the market's hidden architecture. We're not just looking at where price went. We're diving deep into the psychology behind the moves using a seriously powerful tool called volume profile.
So, have you ever felt like this? Just lost. Staring at a chart, price is wiggling all over the place, and you feel like you're just guessing. You see what's happening. Sure, price is dropping, but you're totally missing the why and the where. And that's the real question, right? What's next? Do I buy? Do I sell? It's that confusion, that ambiguity that we're going to tackle today.
And boom, here is the solution in action. Look at the left. That's chaos, right? Price is tanking, but where does it stop? Who knows? Now look at the right. We add volume profile. That's the histogram you see on the side. And suddenly, clarity. We see this massive zone of institutional support that was completely invisible a second ago. This isn't just some other indicator you slap on your chart. It's a map. It literally shows us the footprints of the big money, telling us where the real action happened. It turns that mess into a real, actionable plan.
All right, here's the game plan for this explainer. First up, we're going to uncover the market's hidden map. Then, we'll learn how to actually read it by decoding its language. After that, we'll dive into the 4 main stories the market tells, break down 3 core trading setups you can use, and finally, wrap it all up with how to execute everything with precision.
Okay, let's jump right into our first section, uncovering the market's hidden map. Seriously, think of this like putting on a new pair of glasses. You're going from seeing a flat 2D world of just price and time to a 3D view that adds volume. This is how we go from pure chaos to absolute clarity.
But you know, any map is useless if you can't read it, right? You need to understand the language. So that's what we're doing next. We're going to decode the language of volume, breaking down the key pieces of the volume profile so you can look at one and know exactly what it's telling you.
So this is a really fundamental shift in how you look at a chart. You see that standard volume indicator at the bottom? All that tells you is when volume was high. But volume profile, this histogram on the side, it tells you where the volume was high. It shows you the nitty-gritty of how much was traded at every single price. And from this, we pull out 3 absolutely crucial bits of info: the point of control, high volume nodes, and low volume nodes.
First up, we've got the point of control, or POC. You got to remember this one because it's the single most important level on the whole profile. It's simply the price where the most business got done. It's the point of maximum agreement, where buyers and sellers were happiest to trade. I like to think of it as the market's center of gravity. Price just gets drawn to it like a magnet, and you'll see huge reactions around it.
Next, we have the high volume nodes, or HVNs. Just look for the thick, chunky parts of the profile. These are your balance areas, places where buyers and sellers just chilled out and traded a ton of volume back and forth. Now, because so much business was done here, you can bet that institutions were building up huge positions, and that means these zones become powerful areas of support and resistance down the road.
And of course, the total opposite of an HVN is a low volume node, an LVN. These are these super thin, skinny parts of the profile. They scream price rejection. The market basically said, nope, we don't like this price, and moved on. Think of them like vacuums or potholes on a highway. When price hits an LVN, it doesn't stiff around. It tends to just slice right through it, racing to find the next fair price in a high-volume node.
Okay, so now we know the language, right? We've got POC, HVN, and LVN down. Now we can start reading the stories. Because every single day, the volume profile creates a distinct shape, and each shape tells a totally different story about the ongoing battle between buyers and sellers.
And here they are, the 4 main characters in our story. You've got the D-shape profile, that's a balanced market, your classic sideways chop. Then there's the P-shape, which looks like the letter P. That tells you buyers are in control, they rejected lower prices. The B-shape is its evil twin, showing sellers are dominating. And last, the thin profile. That's a powerful trend, where one side was just steamrolling the other, slicing through prices without even stopping for a breath.
All right, this is the part you've been waiting for. This is where the rubber meets the road. We've got the map, we speak the language, we can read the stories. So now let's turn all this theory into 3 concrete, actionable trading setups that you can literally start looking for today.
Okay, setup number 1, the volume accumulation. The story behind this one is super simple. Big institutions, they don't just slam the buy button. They build their massive positions quietly, inside a boring sideways market. Then, once they're loaded up, they kick off a huge trend. Our job? It's to find that quiet accumulation zone, that HVN, and then patiently wait for the price to come back and test it.
We then jump in, betting that those same big players are going to defend their entry points. Let's see this in the wild. Check it out. You see that initial rotation, that sideways chop? Then bam, an aggressive move down. So we draw our volume profile just over that rotation period. And what does it reveal? A giant high volume node. So we wait, and when the price pulls back right to the edge of that zone, what happens? The sellers who started this whole move step back in to defend their turf, and that gives us a picture-perfect short entry. All right, next up is the trend setup. You've heard it a million times, right? The trend is your friend. But the hardest part is figuring out where to jump in without getting run over. Well, this setup solves that problem. In any strong trend, the market has to take a breather. It pauses to build up energy. And these little pauses, they create distinct volume clusters. These clusters become our golden ticket, our high probability entry points to get back in sync with the trend.
Take a look at this. We've got a killer uptrend, just ripping higher. And then the market pauses for a bit. We just draw our volume profile over that little consolidation, and there it is, a super clear volume cluster. All we have to do is mark the start of that cluster and wait. And sure enough, when price pulls back to that level, the original buyers who started the trend jump back in, and we can ride the next wave up with them. It's that simple.
And our third core setup is the rejection. I love this one. This is all about spotting a failed attack. You're looking for a sharp V-shaped move where, say, the buyers tried to break out, but they got absolutely hammered back down by the sellers. The key is to find the heavy volume cluster that was created right at the peak of that fight. That's our entry zone. We're betting that the winners of that fight will show up and defend their ground if it gets tested again.
And just look at how the volume profile pinpoints the exact battlefield here. You see that nasty V-shaped rejection right at the top? When we draw the profile over that whole move, it shows us exactly where the most intense fighting went down. That's our heavy volume cluster. So we mark the edge of it, wait for price to come back up, and we take the short trade, fully expecting those aggressive sellers to show up and do it all over again.
So knowing this setups is awesome, but it's only half the battle. Executing them like a pro, well, that's a whole other story. So in this last section, we're going to talk about how to stack the odds in your favor and how to actually manage the trade like a professional once you're in.
We can really level up our trading by doing something called stacking the odds. All it means is finding multiple independent reasons for a trade to work at the exact same level. A killer example is combining our volume profile setup with a fair value gap, an FVG. An FVG is just a little price inefficiency that shows a market imbalance. But man, when the edge of one of our heavy volume clusters lines up perfectly with an FVG, you've just found yourself an A+ high probability setup. And here's another layer of confirmation you can add. The classic support becomes resistance flip. This is trading 101, right? When a strong support level breaks, it often turns into new resistance. Now, if you find that that flipped level also lines up with one of our volume profile setups, like a trend setup volume cluster, the strength of that signal just gets magnified. It's huge.
So the obvious question is, where do we put our stops and our targets? Well, guess what? Volume profile gives us the answer to that too. The logic is really simple. We use the volume nodes as barriers. Your stop loss goes safely on the other side of the volume node you're trading from. Why? Because if price breaks through that, your whole trade idea is probably wrong. And your take profit? You place that just before the next big volume node, because that's where you can expect the opposition to show up.
And finally, let's talk about actually managing a winning trade. Look, a huge mistake people make is jamming their stop loss to break even way too early, and then they get wicked out on a tiny pullback. A much smarter way is to use the market's own structure to guide you. So here's a simple rule. Once price has moved about 75% of the way to your target, look for the most recent little pullback or reaction point and tuck your stop loss just behind that. This locks in most of your profit but still gives the trade enough room to breathe and hit your final target.
Wow, we have covered a ton of ground here, from the basic language of volume all the way to advanced execution tactics. But really, it all boils down to one simple idea. The market is always telling a story. It's telling you where it sees value, who's in control, and where it's probably headed next. The only question left is, are you ready to finally stop guessing and start listening?